Hello everyone, welcome to my YouTube channel. My name is Srinivas. I am a software engineer having experience of 17 plus years. Earlier I created some YouTube videos on my channel related to creating our own algorithmic trading system using trading APIs in Python language. I hope some of you got benefited from my earlier videos. It's been a long time I'm away from YouTube. So I'm back to YouTube again. This time I have chosen a topic to create awareness on trading strategies through backtested data. I've been seeing a lot of new people coming to the market, especially the youngsters, and started trading and losing money without any proper analysis. So there are lots of videos on the YouTube on different strategies. Some of those strategies claim like 85% accuracy, 90% accuracy. Look at this. I have copied some of the titles from the YouTube from different videos and pasted over here like MACD 86% win rate, $500 per day for beginners, $15,000 per week. So some strategy, OHL, open, high, low, and the best probable trading strategy. And see, the important thing is red color, risk-free trading strategy that actually works. So what is this? Trading means risk. Without having any risk, how is it possible that you will become profitable from a particular strategy? I don't know how that works, but anyhow, that's a different thing. Look at this. So there are a lot of strategies out there in the public domain, in the internet or in YouTube. So do trading strategies really work? That's the first question. Yes, there are profitable trading strategies, but my main question here is, what are the trading strategies available in the public domain for free? Do really work or not? Correct? Even the strategies that you get from the paid seminars, webinars, work or not? Still a question. Of course. You will come to know only when you start trading those strategies. You pay a good amount of money for the strategy in the seminar or webinar, and you start trading it and you realize the strategy is not going to work and you lose your hard-earned capital, right? What about the free strategies out there? Definitely, they are not going to work, correct? Of course, with some tweaks, the strategies may work, but what the strategies provided directly in the YouTube may not work. But that's a different thing. Just looking at some logic in the YouTube video and start trading in that particular strategy is actually not recommended. The reason here is, without having a strategy backtested, one should not trade the strategy because you don't know whether the strategy works or not. Just because somebody posted on the YouTube and they claim that 85%, 90% accuracy, and some people even show you the backtest results, but the backtested results are just on a few days or weeks time period, which is a very small time period. That particular stock with that particular strategy might have worked during that period, but in reality, it may not work when you go beyond that small period. Like when you test it over the 3 months, 6 months, more than 1 year, the strategy may fail, correct? So ideally, a strategy should work more than 1 year. Not even that, not 1 year is sufficient, but I can say 3 years. Then only there may be chance of the strategy is going to work in future, right? So what is the problem here? How do you backtest then? So one way is manually backtesting. So very difficult. The reason is because you have a lot of data going through the chart, going candle by candle, entry, exit, everything pointing out in an Excel sheet and calculating, the profit and loss, etc. If it is a sell hit, target hit, all these things maintaining manually is very difficult. Of course, if you have some index and you have the higher time frame, that is still possible through manual backtesting. But if you go to the lower time frame, like intraday, 15 minutes, 1 hour time frame, so backtesting is almost impossible. Even 1 hour time frame you can backtest if you considering only index like Nifty or Bank Nifty. But when you try to do the same backtesting on a set of stocks like Nifty 50 stocks or 100 stocks, etc., that is nearly impossible to do manual backtesting. So you don't have an option, right? So you cannot do a backtesting. But what is the other way to do, whether to test a strategy it works or not? So there is a forward testing can be done. But even the forward testing has to be done for at least 6 months. That with a small capital, like 1 lot or even 1 to 2 quantities if you are doing in stock trading. Okay. So in case of forward testing, you have to wait for a longer time, 6 months. So until then, you don't know whether that strategy is going to work or not. So if that strategy does not work, you try out with another strategy that may take another 6 months. So keep on doing it until you find a profitable strategy. You never know how many years it will be going to take that for you to find a profitable strategy for you. Correct? Of course, that is the one way. Most people do that way only. Yes, some other people have succeeded in the past, but that percentage is very less. Maybe 1%, not even 1%, I don't know exactly, but yeah, that's how the trading domain is. Not only that, while doing manual backtesting or forward testing, one has to consider extra cost like slippages, brokerage, STT, transaction cost, etc. Right? So even you find a profitable strategy, when you add up all this extra cost, your profitable strategy may turn into the loss-making strategy, which is quite obvious, right? So, in summary, it's very difficult to find a profitable strategy that is a proven, right, and working. It worked in the past and it may or may not work in future as well, correct? So, but if you do a backtest, at least you have some idea whether the strategy is going to work or not based on, so immediately you can decide, you can scrap the strategy and you can move on to the another strategy if something is not working when you do a backtesting, correct? Okay, so I'm going to create a series of videos on different strategies. I'll do coding of different strategies and I'll do backtest and I'm going to provide the results from the backtest, and then you can decide whether the strategy works or not, and you can take a call. So there's no point if the strategy is loss-making strategy over a period of, let's say, 6 months or more than 1 year. So then there's no point in trading that strategy, correct? So I'll try my level best to backtest as many strategies as possible which are available in the public domain and provide you the results in the form of videos. So in today's video, we are going to backtest a famous strategy which is Opening Range Breakout, which is called ORB strategy. Okay, so let me first explain what is ORB, Opening Range Breakout strategy. So what is the logic here? Let me draw a candle here. Okay, so assume this is a candle, okay, with lower wick and upper wick and the body, right? So this is assume that the first 15-minute candle after the market opens. It can be 1 hour candle as well, but let us consider the 15-minute time frame. Though the logic is like this: wait for 15 minutes, right? After 15 minutes, any point of time during the day, if the price breaks the high of the first 15-minute candle, then you go long, right? And what is the SL here? That is stop loss. Stop loss is low of the candle. And the target. So the target generally based on the risk to reward ratio. Assume that risk to reward is 1:2. Then in that case, your target will be 2 multiplied by SL points. That means if your SL is 2 points, your target will be 4 points. Similarly, during the day, if this price breaks down the low of the first 15-minute candle, you are going to short, right? And in case of short, the stop loss is high of the candle, right? And similarly, target again depends on the risk to reward ratio. Let's assume we are doing 1:2 risk to reward. In that case, so the target will be double of SL points. This is the basic logic behind the opening range breakout strategy, which is a famous strategy, has been there out for many years. This strategy might have worked in the beginnings, maybe, I don't know, exactly 15 or 20 years ago, but in the today's scenario, it's very difficult to work with some basic strategy like this. Of course, if you pick the strategy, there's a chance of turning this strategy into profitable, but again, it's very difficult. That's not easy, okay? So here I coded this strategy in Java. Here, look at this. So I just naming the strategy name as ORB. And I just want to highlight few points in the strategy I coded. So here the total capital I just took 1 lakh capital, and the risk per trade percentage is 1%. That means on each trade I'm going to lose only 1% of 1 lakh capital, which is 1000 rupees in this case. And forget about this part for now. And here I'm going to test this strategy on a set of F&O stock list. What are the F&O stocks? Basically, this is a list of F&O stocks. You have all this around, I think, 180. Yeah, 180 stocks you have in F&O section as in today, right? Okay, then so the logic goes like this. I'm going to consider both the long and short trades here. And I just configure the ORB period, that is opening range breakout, to consider as a 15 minutes candle or 30 minutes or 1 hour. So in this case, I am just considered a 15 minutes candle. Then look at this. And so since there are a lot of stocks here, 180, so we can't trade every stocks every day, right? So I just put one thing here, just to filter out some of the stocks, mean range change. That means the 15-minute candle should be at least 1% high from low to high, okay? So let's say the low of the candle is 1000 rupees and the high of the candle should be minimum 1010 or greater than. So then in that case, the percentage change between the low and high of the candle is 1% or greater. So that means we are not going to trade whichever candle having less than 1% for the first 15-minute candle, okay? Now, and again, here I just put one more check. I take the trade till 2:30 p.m. After 2:30, I'm not going to take any trade, even if it's triggered, because there will be a less time after 2:30. Almost you have to square off the trade at 3:15, right? Only 45 minutes left. That's the reason I'm just considering only the trade has to be triggered before 2:30 p.m. Okay, and I configure the risk to reward ratios too. That means 1:2 risk to reward. In this case, if you lose 1 rupee, and you have to get 2 rupees profit, right? And here is the code. Just you may or may not understand, but yeah, this is how the code goes. Like, okay, we'll consider both long and short trades. And here, while calculating the quantity, how I'm calculating based on the total capital and the risk per trade percentage. So basically, I don't know whether you are aware of how to calculate the quantity to be. You should not take quantity just like 100 quantity in each stock. Let's say a stock is trading at 1000 rupees, you take 100 quantity, and the stock is trading at 200 rupees. You take again 100 quantity, but the stop loss for both of them is different, and you may end up losing more money if SL hits if you have the same quantity for the 1000 rupees stock, correct? So, but this has to be calculated how much you are going to lose on a particular trade. Based on that, you calculate the quantity. So generally, I hope you may be aware of it, but still, let me just explain how to calculate quantity here. For example, let me explain how to calculate number of quantity to be taken when you are going to take a new trade. So this is based on the amount that you willing to lose in a particular trade. That generally is some percentage of the total capital. Assume that we're going to lose 1% of the total capital on a single trade. So in this case, so our capital is assumed that 1 lakh, correct? So we are going to lose 1000 rupees, right? Correct. Now let's calculate a quantity based on the stock price. Assume some X stock is trading at 200 rupees, correct? You are going to take entry at 200 rupees. Assume this, your stop loss is 185. So that is 5 rupees you're going to lose per each stock when the stop loss hits, correct? And the total amount that you're going to lose on this particular trade is 1000 rupees. So the difference between your entry and the stop loss is 5 rupees. Just divide 1000 divided by 5, that is 200. That means you can buy 200 quantity of this particular stock or sell. I mean, it can be anything, buy or sell, but trade. So that means when your SL hits, you are going to lose 5 rupees on each stock, that is 200 into 5, so is about 1000 rupees. Correct? Assume that, take another example, Y stock is trading at 1000 rupees, right? And for example, the stop loss is 990 rupees, correct? So that means you're going to lose 10 rupees for each stocks when the stop loss hits, correct? So you're going to lose the total amount for this trade is 1000 rupees divided by 10 rupees, which is the difference between your entry point and the stop loss, okay? Which comes at 100 quantity. So in this case, you have to trade only the 100 quantity when in case of stock Y, but in case of stock X, you can trade with 200 quantity. In both the cases, when your stop loss hit, you are going to lose the same amount, which is 1000 again, which is 1% of your total capital. Okay, let's come back to our ORB trading strategy code here. As I explained everything, like we are going to take trade on the first 15-minute candle breakout or breakdown with some risk to reward ratio as 1:2, and we are keeping the stop loss as a candle low in case of long trade, and in case of short trade, we are keeping the stop loss as a candle high. Okay. And another thing I'm considering here, I just want to make sure there's a delta. So get delta. When I'm not going just breakout of high, I'm not going to take, but I'm just adding some delta point. Like in case of 100 rupees, I'm going to add 100.05, 100.1, like 500 rupees, 400.5, 500.5 something. In case of 1000 rupees, let's say I'll apply 1000.1, something like that. Not 1, sorry, 1001. So only on the breakout of 1001, I'm going to take trade. So just to give some buffer before taking a trade, that is nothing but a delta. Okay, and yeah, this is the parameter. Let's run this program. First of all, let me tell you what are the backtest period I've selected here. So I'm going to test this strategy on FNO stocks, on 180 stocks, right? And the from date, chosen just this month start date and yesterday date, that which is 21st of October. And let me run this backtest. The test is running here. Let's see. Wait for some time till the backtest is over. See, if you look at the net PL, which is 23,278. Okay, this is a this strategy should give a profit for the selected period, that is October 1st to October 21st of 2024. If you look at max loss of a day minus 4% and max profit of day 9%, and the overall the return we got 23%, which is actually 23%, 23,278, which is on 1 lakh capital. Great, right? So, but in reality, things go different when you backtest in a more time period, like more than a month or different months. Right? If you look at all the stocks, again, there are a lot of stocks here. I think the stocks selected during this period are all this thing, because we have one filter, right? 1% filter in the first 15-minute candle. Only when the candle is of size minimum 1%, then only take a trade, otherwise ignore it. If you look at then enterprise here, there are 4 SLs here. and 4 square of profits and 1 is square of loss. So I'm just going to explain one thing here. So whenever you take any trade, there are multiple possibilities. Multiple outcomes can come from the trade. Either it can hit SL or it can hit the target. If the SL or target does not hit, what will happen? You are going to square up the trade at, let's say, before this market hours, assume 315 or 310. In my case, I'm going to square off at 315, correct? And even when you square off the trade, again, the trade can go into loss or profits. That's what I'm printing, like whether it's a square of how many square of profits and how many square of losses in case how a trade does not hit SL or target. So if you look at, there are 2 SLs here in case of Alchem, and there are 2 ABB, 2 SLs, and there are no profits. Maybe there's square of losses. So these are stocks gave loss, and this is a stock giving profits. The overall is like 23. But again, there is no proper risk management day. I'm considering all the stock to be traded by default just for the simplicity. If one wants to trade really, they have to select particular stocks. They have to take only few stocks for trading, let's say not more than 5 stocks per day. You are not going to do, let's say their breakout comes in 20 stocks in a single day. You are not going to trade on all the 20 stocks, right? Yeah, you have to select some 5 stocks only, but I'm not considering all the stuff. This is just simple strategy which tells what stocks are going to work on this strategy and what stocks are not going to work on this strategy. Okay, let me choose a different time period. Let's go with the complete year. Is that fine? Yeah. 2024 January 1st to 2024 October 21st till yesterday. I'm going to run this backtest again. So this time it's going to take more time anyhow. Don't worry. I'll forward this video. Yeah, the backtest result is ready for the duration of this entire 2024 year till yesterday, that is October 21st. So look at this, there's a total loss of 94,000 and capital of 1 lakh. That means you lose entire capital if you trade this strategy, correct? So look at the result, like 2401, it gave 4% return in January and 24% loss in February, 10% profit in again March, 4% loss in April, 16% loss in May, again June loss, July loss, 8 loss, 9. So see the continuous loss. If you consider the drawdown, let's check what is the drawdown of the strategy. So it's basically 120%. Of course, it's more than the capital. So essentially, you will lose complete capital if you just blindly trade this strategy as per this logic. Okay, that's how the strategies work in reality, unlike the rosy pictures you see on the YouTube videos. Okay, this is the reality, and there's no point in going beyond this 2024. Even if I go to, let's say, 2023, the same result will come. You are going to lose entire capital, okay, if you trade this strategy like this. Okay, one more thing, I just not only showing the data here, programmatically generating the Excel sheet in the report, so we can see this data in Excel directly. If you look at the generated report here, these are all the trades. So there are around 980 trades. So I'm just going to explain what are things you present. This is a trade start time, trade end time, and the quantity, entry, exit, the PNL, and not only that, I'm also considering the charges like brokerage, STD, transaction, etc. These charges, and after charges, the PNL after the charges is like this. What is the exit reason for the stock? SL hit target, you're just squared off if the trade doesn't hit SL or target. And so what is the max loss, max profit during the day? Let's say if you just leave the trade without a stop loss or without any target, so how long the trade has moved from your entry time till the square of time. Okay, this is how these columns. And okay, then okay, this is a sheet. Another sheet, I'm just providing a symbol wise PNL here. So some stocks will give you profit and some stocks will end up in loss overall. So it may happen like over a period of, let's say, 1 month, some 2 to 3 stocks may be performing, but in next month some other stocks may perform, and in the next month some other stocks perform, but you never know, right, which stock is going to perform in which month. So without knowing that, how do you trade it? So essentially it's not possible to figure out what stock are going to work in a particular month or in a particular duration, right? And here is the date and P&L. Date wise P&L, how much loss or profit in a day, and date symbol wise is a month wise. Of course, I just shown you most of the months are in loss, and in particular month, what month and what symbol has given profit or loss, and year wise P&L. Of course, this is the year, and this is a summary. Win loss ratio, and what is the stock and how many trades taken, out of how many square of how many targets, how many SL hits, etc. So in case of Biocan, you will see the Biocan looks worked in the entire year. If you look at Biocan, Bajaj Finance, let's say there are Bajaj Finance, still there are 5 stop loss, but in case of Biocan there are no stop loss, there are no target hits. It's all about 10 times square of it and that complete its profit. I'm not recommending to trade in by just looking at this report and just don't start jump and start trading Biocan with this strategy, because you never know, this may stop from the next month itself while you start trading it, right? So that's not the way to trade. Okay, just don't blindly anything, don't do anything based on this report. It's not any recommendation, just an educational purpose video. Okay, that thing is clear for you. So if you trade without any logic and just going blindly, so I'm sure you're going to lose your capital, right? So I don't want that from anyone. Just please, I request, nobody should trade anything based on these results. Okay, and summary, because it is loss-making strategy, so there's no point in trading, right? Simple as that. So the total trades 986, SL hit 339, square of trades and square of win trades, square of loss trades, and square of win percent is actually high here. I mean, the number of trades during the square of 64. I mean, this is really high. But if you look at the SL hit trades 339, but target hit trades, I mean, of course, there are no target. That's surprising for me. Okay, let's see. And average monthly PNL, whatever, is every month you're losing around 10%, and all win percent. So there's if you look at the number of trades that ended in positive to the number of trades ended in, so it's a 42% win rate. I can say, when I say win rate, that doesn't mean it's a target hit. It just some positive win. It can be just a 0.1%, 0.2%, 0.5%, doesn't matter, but it's a for profit trade. So out of 100 trades, there are 42 profit trades, and rest are in loss. Okay, so that total long trades 473 and short trades 517. The total P&L of all long trades this much, and total P&L all short trades still anyway the total, and the total charges here are 55,000. So if just blindly look at this charts point, this is very important. So even if you assume that this is a profitable strategy and assume that you earn 50,000 rupees from this strategy over the period of this 10 months, and the charge itself eat the entire profit, let's say 55,000. So you'll end up in just no profit, no loss, even this strategy makes 55,000, assuming. But that's what happens. The actual result without charges is let's 40,000. If you look at this figure, including charges 55,000. So the total is 95. That's how you lose the entire capital, right? So one has to consider the charges compulsorily. Otherwise, you never know whether the strategy actually works or not, right? Even the profitable strategy can turn into loss-making strategy if you don't calculate charges and if you do not consider the slip pages. Okay, that's how it is. Yeah. Okay. And let's try one more thing here. I just want to, let's try the same strategy on a 1 hour time frame. Let's 60 minutes, correct? And I'm just going to make this percentage change to 2, because on 1 hour time frame, getting 1% is very easy for any stock. So let me just make 2%. So only when a first 1 hour candle makes 2% move from low to high, so then only we'll take a trade. When it moves upside, when it breaks high, we'll take long. When it breaks low, we'll take short trade. So the same logic again. Let me run the backtest again for the same time period from 2024 January 1st to 2024 October 21st. Okay, this is going to take time. Let's wait for some time. Okay, the backtest is done and the result is ready. And if you look at the overall result here, again, let's say the stocks may change this time because earlier we had Biocon and some other stocks on the top list, but you may have different stocks here because we changed the time period to 1 hour. And yeah, of course, there are quite stocks ended in profit overall, and there are many stocks ended in loss here. If you look at the most of the stocks are in loss actually. Yes, again, the 95 total trades. SL 156 trades, square of total trades 821.9. So that means a lot of trades actually going to the square of mode without hitting stop loss or target. So if you look at the square of win percent is 51 here. Okay, good. But again, you should look at only the profitability of the strategy at the end of the day. It doesn't matter what are the all win. Yeah, if you look at the all win percentage, but still 43, so above 43. That means the profit trades to loss trades. Again, this is just a small period, that is 10 months. Okay, you should consider even 2 to 3 years. Then only it actually makes sense to consider whether a particular strategy is profitable or loss-making strategy. So if you look at the overall here, the actual loss is minus 18,000 over the period of this 10 months. But if you include the charges, there's 40,000 charges. So the net result is 57,000. So in this case, if you trade this strategy without any backtest or without any knowledge, that you're going to lose your 60% of the capital, right? There's no doubt. Okay, I forgot to do one thing. Let me validate some of the trades, what are the backtests is showing. Is this data actually correct or not? So we have to validate some random trades so what is the code I written is actually correct, else it may be wrong also. Sometimes we can do mistakes in the coding as well, so that may tell you end up in a wrong trade, correct? So let's see. We'll validate randomly. Let's say take the latest date, let's say 21st, right? So there are some short and long trade. Let's say take this SL trade first, Apollo Hospital. Apollo Hospital and the date. Sorry, I'm not Apollo Hospital. I'm sorry. Yeah, I'm just on 15-minute time frame here. So I'm going to validate the trade for 21st. There's a long trade. It happened at 9:30 and the trade exited 9:50. So let's see. Look at the 9:15 candle, Apollo. Sorry. Yeah, this one. 21st October 9:15. Yeah, this is the candle. And the high is 7015.85. Okay, let's see where the trade actually taken place. 701, because of the delta we applied. So it took the trade at 7019.9 and breakout of 7019.9, even though the high is 7015. Right? So the trade entered here, and exactly after 2 candles, the trade actually got accelerated because the low has broken here. So this has stop loss at 6968.3. Let's see. This one, the low 6968. Of course, there's some buffer because it's showing 6972, but because of the buffer we had, it's about 6968 where the SL was hit. So it's a lost trade. So the SL hit in this 945 candle. If you look at the timestamp here, it's at 950, right? Which is nothing but within that 945 to 50 candle. Because I'm going by 1 minute candle, that's why I'm able to track here at exactly what minute the SL has get. Okay. And let me take another example. Let's say Adani Enterprises. It's a short trade. Okay, again the trade took around 9:30. Let's say Adani Enterprises. Okay, go here. 21st is 9:15 candle. Yeah, the low is 2983.65, high is 3014.95. So in this case, I think the low has broken. Let's see if this validation is matching or not. Adani Enterprises 9:30 trade, 2981.95 short. Okay, so this is 2983 because of the buffer. We have 2981 point something. The trade entered here. Of course, stop loss is this one. The SL didn't hit. If you look at the chart throughout the day, just going down. So let's see where the trade actually exited 2939 at 1515. That means no stop loss hit, even no target hit. Our target is double of our SL, right? So at 1515, the trade exited 2939 here. Look at this candle, 1515 candle. So this is a close of candle 2932. Okay, that is nothing but okay, but it's showing 2939 1515. Let me check what is wrong. Oh, sorry, I should look at 15 candle, because 1515 candle closing will be at 1530, right? 15 candle closing will be at 1515. So this closing is 2937.6. So it's 2939, just considering the buffer part. So we squared off at 2939. Okay, buffer slippage, whatever you consider here. Yeah, so this square off trade is ended in profit. The profit percentage, I think, maybe 1.44 here in this case. Okay, yeah. So yeah, whatever I coded in the program, actually, whatever you see, the output result of the backtest that actually matching with these trades as per the chart. So you can consider this program is correct. Guys, a small correction here. Sorry that in the previous backtest report, I enabled some flag to consider each trade till the square of time instead of considering the target. So that's the reason there were no trades with target hits in the previous backtest report. So I have disabled the flag and rerun the backtest again. So this is the latest result on a 15-minute time frame for the opening range breakout strategy. So again, this time period is same, 2024 January 1st to 2024 October 21st. The total trade 96. You can see the target trades are 122 and SL hit trades 335 here. Square of trades 529, and out of them square of win trades 306, and square of loss trades are 223. So basically, if you consider the target to SL hit percentage, it's just 26%, and rest of the trades, that is out of 986, 529 trades are actually squared off without hitting SL or without hitting any target. So if you consider the square of win percentage, that is 57, that means out of 100 trades, there are 57 profit trades and remaining are loss trades in case of square of trades. Okay, and if you look at the result, like the overall picture, so again in the same way, even in the previous backtest report where we didn't consider the target, instead we just waited till the square of time, we lost almost entire capital 95,000, right? So here also the same result, when we consider the target here. Yeah, there are many trades target hit, but the overall result is coming like minus 90,000, so including the charges. So if you consider the actual loss is minus 35,000 and the charges are 55,000, so the net to net, so we are going to lose 90% of the capital in this case. So yeah, so the result is more or less same. And if you look at the trades here, yeah, Biocan earlier we had no targets, no SLs, right? Only square up. But now you see 3 target hit trades, and of course in Biocan there are no SL trades, and 7 profit trades and 7 square up profit trades. Okay, and yeah, about the Airtel Conquer, and there are a few trades actually worked. So again, what I'm selling, don't go and start trading any of these stocks, because these are just some sample results for the period of 10 months. Of course, these things may not work if you start trading in. So that's a strict warning from my side. Don't trade anything based on these results. Okay, thank you. So that's it for the day. I hope you enjoy the video, and you come to know that what exactly the result of any trading strategy like this ORB. So in the next videos, I'll come up with more strategies. For each strategy, I'll do a separate video, and I'll come up with the backtest results. Okay, and that will help you to take any decision to going forward with that particular strategy or not. So most of the time, you'll find many strategies actually fail, to be frank, and you will come to know what generally does not work in the stock market. So what works is different thing, but what does not work in this stock market, you will be learning through all these videos. Okay, thank you everyone. I would like to tell everyone to reach my videos to as many people as possible, because most of the people don't know the dark reality of the stock market and trading strategies. Okay, so yeah, my intention is just to create awareness of how the things work in the stock market and what does not work. Yeah, that's what. So good everyone. Bye for now. Thank you all.